Hello everyone, welcome to WATCHTHIS Accountancy. In this video, you are going to learn MCQs in accountancy for upcoming board exams. I hope everyone is preparing hardly and smartly for the upcoming board exams. My best wishes to you, and you should focus especially in MCQ. This MCQ plays vital role. Why it is being plays vital role? Because if a topper is leaving a mistake in MCQ based question, definitely he or she cannot score centum. So that is why it is being vital in the topper's point of view. Totally 20 MCQs going to be asked. Out of these 20 MCQs, 16 MCQs will be placed in part A, 4 MCQs will be placed in part B. Out of these 20 MCQs, 7 MCQ will have internal choices. That is the plus point to you. CBSE board eliminated your complexities. So make use of it. This will be very helpful for the centum scorer. So centum scorer, you practice lot many MCQs. That is the key secret, key takeaway to score maximum marks in accountancy. Especially our average students will see the miracles. In my point of view, who are average students? Those who are getting 50 and above in their teacher's curriculum itself. So definitely they can score 90 plus marks in accountancy, almost double to compare with their previous marks, isn't it? So this video going to be very much helpful to you people, especially for average student, to score maximum. So practice more and more MCQ based questions. And slow learners, like poor students, they are not up to the level of getting pass mark. This video going to help you to score minimum pass mark. All the 21 marks based on multiple choice questions only. No match the following, no true or false, no dash answer, fill in the blanks and all. So these 20 MCQs will be based on assumption and reasoning and problem solving or calculation oriented, knowledge based questions, case study based questions, like ways we can expect. Already CBSE board issued the model question paper. What question paper? Model question paper. That is the key takeaway here. It is the clue how the questions will be asked for upcoming accountancy exams. So we should practice a lot based on those questions. Here in this video, we are going to discuss all 20 MCQs, step-by-step calculation and how to practice it. Everything I am going to teach you here. Come, let's learn it. Okay, this is the sample question paper for current year 22-23, our subject accountancy. General instruction, when you are being free, don't forget to read the general instruction. So look into that 5th general instruction, question number 1 to 16, 27 to 30 carries 1 mark each. So totally 20 questions based on 1 mark, 20 marks, that too based on MCQ questions going to be asked. MCQ based questions. And one more instruction is very important, and look into that 9th general instruction. So in this 9th general instruction, clearly you can see how many questions comes with the absence. There is no overall choice. Very important, there is no overall choice. However, an internal choice has been provided in 7 questions of 1 mark. 7 questions going to come with the internal choice out of 20. Out of 20 MCQs, 7 MCQs going to come with the internal choice. So either or question. How lucky you are. Okay, listen here. Navya, Radhe were partners sharing profit and losses in the ratio of 3:1. So 2 partners are there in the business, Navya and Radhe. Their existing profit and loss sharing ratio is 3:1. Shreya was admitted for 1/5 share in the profit. Shreya is the new partner, one who is expecting 1/5 in the future profit from the future profit. Shreya was unable to bring her share of goodwill premium in cash. That is the very important point here. Unable to bring her share of premium in terms of cash. And the journal entry recorded for goodwill premium is given below. So journal entry has been given here. So as per this journal entry, Shreya's current account has been debited by rupees 24,000 and Navya and Radhe were credited 8,000, 16,000 respectively. This is being entry for goodwill treatment pass. So it is the treatment valuation of treatment entry, goodwill treatment entry. The new profit sharing ratio of Navya, Radhe and Shreya will be what? So this is the question. They are asking us to prepare new profit and loss sharing ratio for all the three partners. So generally what we will do, 1/5 she is expecting. Oh, Shreya. So Shreya's share is 1/5 from the future profit. 1 minus 1/5 is equal to 4/5. Then we will go ahead with their existing profit and loss sharing ratio, that is 3:1. So 3/4 of 4/5 and 1/4 of 4/5. Likewise we will go. But here in this case we should not go like that, because here treatment has been passed especially for the goodwill. This new partner unable to bring her goodwill amount in terms of cash. So this is the treatment entry has been given. So this treatment entry gives a clue. You well known about that goodwill. Goodwill will be compensated to the sacrificing partner by gaining partner. Here only one partner gaining, that is Shreya, one who is coming as the new partner. He is expecting 1/5 from the future profit. So goodwill will be compensated to the sacrificing partner. 8,000, 16,000. Take the ratio 8,000, 16,000. So it is 1:2. So totally 3, right? So 3, and she is expecting 1/5. 1/5 will be multiplied by 3/3 now. So 3/15. So 3/15 is the gained by Shreya. So now we are going to calculate new profit sharing ratio. Existing profit and loss sharing ratios for Navya and Radhesh were 3/4, 1/4. Now 3/4 minus 1/15, because this 3/15 we can divide into 2 as per this ratio, 1/15 and 2/15, right? 1/15, and for Radhe 1/4 minus 2/15. So common factors should be taken. 15 here 4, so definitely it will meet with 60. First set will be multiplied by 15. Second set multiplied by 4. So 15 into 3 are 45. 4 into 1 are 4. So 45 minus 4 is equal to 41/60. And for Radhe, second partner, it is for Navya and this is for Radhe. Radhe's existing profit and loss sharing ratio is 1/4. So now as per this sacrificing ratio, 2/15 sacrificed by Radhe to Shreya. That is why 2/15 we have taken here. So now common factor is 60. So first set will be multiplied by 15. Second set will be multiplied by 4. 15 into 1s are 15 minus 4 into 2s are 18, 8. So 15 minus 8 is equal to 7/60. So new profit and loss sharing ratio is 41:7. 41:7 comes here. And for the new partner, Shreya, you well known about Shreya. So Shreya is enjoying 3/15. So base should be 60, right? So 3/15 into 4 will be 60, right? 4/4. So 3 into 4s are 12 divided by 60. So now you well known about that new profit and loss sharing ratio for all the partners are 41:7:12. So this is the new profit and loss sharing ratio. In case treatment has been passed especially for the goodwill, means we should go ahead with this method. If you are following this oldest method, definitely you can't get the right answer. So right answer is A, 41:7:12. Listen to the second question. Assessment reasoning based question it is. Assessment is commission provided to partner is shown in profit and loss account. Commission, where it will be given commission and all? Commission will be given in profit and loss appropriation account. But here they mentioned it is profit and loss account. Completely wrong. And reason, commission provided to partner is charge against profit. Charge against profit. It is not charge against profit. Commission is appropriated profit. From the net profit only certain percentage will be given to the partner as commission in case deed permits. So this is also wrong. And is to be provided at fixed rate. Fixed rate okay, but it is not a charge against profit, right? So both assertion and reason are incorrect. Some of you well known about it, some of you don't know about it. partner's loan, in case partner given loan to the firm, interest on partner's loan will be considered as charge against profit. Interest on partner's loan is considered as charge against profit, will be treated in profit and loss account only, not in profit and loss appropriation account. Okay, but commission is not like that. Interest on loans and advances and all, okay, we can accept it. Managers commission, other remunerations, but salary and commission will be taken place in profit and loss appropriation account, which will be considered as the extension of profit and loss account. If net profit will be brought down to the credit side of profit and loss appropriation account, with the help of this net profit only commission, salary and interest on capital, if any interest on drawings will be credited, and the profit will be appropriated. If loss will be appropriated. So this will happen, right, as per their existing profit and loss sharing ratio. So here in this case, commission provided to partner is in profit and loss account. It is wrong statement completely. And second one is commission provided to partner is charge against profit, also wrong. Only the correct is fixed rate. Maybe sometimes fixed rate, otherwise sometimes some amount. That is depends upon the problem. Come for the next question. A share of rupees 10 each issued at 4 rupees premium, out of which rupees 7 including rupees 1 premium was called up and paid up. The uncalled capital will be what? So that is the question. So here par value, face value, nominal value of the share is rupees 10. 4 rupees is premium. So collectively company is expecting from the people to pay 14 rupees. Out of this 14 rupees, company called 7 rupees. Very clearly has been mentioned here, out of which 7 rupees was called up and paid up. So 7 rupees, that too one condition has been given nearby, 1 rupee is the premium money. Very clearly has been provided here, 1 rupee is premium. So 4 rupees premium totally, out of this 4 rupees, 1 rupee has been called up. So now they are asking, what is the uncalled capital? Uncalled capital from the face value, par value, nominal value. How much called actually by the company? Not 7 rupees, 6 rupees. 6 plus 1 premium money is 1 rupees there. So totally 7 rupees it is. So out of 10 rupees, 6 rupees only called up. So remaining uncalled is 4 rupees. So here what is the question? The uncalled capital will be 4 per share. 4 per share is the answer. In case, if they are asking how much has been called by the company, means 6 rupees. Are you clear? And how much premium yet to be called? If they are asking 4 minus 1 is equal to 3 rupees. Premium yet to be called. That and all mandatory. So in any way question may be arised by the board. So you be ready for answering like this kind of questions. But very easiest chapter issue of share. So you can learn a lot from that chapter. Come for the next question. While issuing dash type of debentures, company doesn't give any undertaking for the repayment of money borrowed by issuing such debentures. Anyway, company issued the debentures to the people generally. It is debenture holders are considered as creditor for the company. So company should settle that. It is their company's responsibility. While issuing dash type of debenture, company doesn't give any undertaking. So not on the assets while repaying money, but it is a borrowed fund from the people. By issuing dash kind of debentures, company is borrowing money. That debenture doesn't charge on company's assets. If it is redeemable, definitely. Secured creditors, so definitely. If it is convertible debenture, they can convert into preference share or equity share, so this will happen. So zero coupon rate debentures and all, you will know about that, zero coupon bonds oriented. But here irredeemable debenture is the answer because it is non-redeemable in nature. So that is why company will not give priority for this kind of debenture, but company will give interest for irredeemable debenture also, but on the asset it is not charged. So keep in mind. Come for the fourth question. Samiksha, Arshia and Divya were partners in a firm sharing profits and losses in the ratio of 5:3:2. So 3 are partners, Samiksha, Arshia, Divya. Their existing profit and loss sharing ratio is 5:3:2. With effect from 1st April 2022, they agreed to share future profit and losses in the ratio of 2:5:3. So this profit and loss sharing ratio is going to be changed. It is their new profit and loss sharing ratio. It is their existing. So in case in the problem, if they are given like this, what we will do, you will know about it. So easily you will find out that sacrificing or gaining by both the partners, by all the partners. Their balance sheet showed a debit balance of rupees 50,000 in profit and loss account. See, profit and loss account debit balance means what it is? Net loss. Negative figure, net loss. So net loss is how much? 50,000 rupees. 50,000 rupees. And a balance of rupees 40,000 in investment fluctuation fund. How much? 40,000 is investment fluctuation fund has been provided in the liability side of the balance sheet. Okay, liability side of the balance sheet. Investment fluctuation fund. How much? 40,000 rupees. Then the investment fluctuation fund is market value of an investment is 30,000 against the book value is 50,000. Actually, as per the previous year balance sheet, investment is 50,000. In current year, the adjustment has been provided, it is 30,000. So, market value wise, if you see, investment is reduced. So, investment is reduced. That also being negative figure 20,000. But we have enough amount. 40,000 as investment fluctuation fund. So 40,000 minus 20,000, we have 20,000 in plus figure. Okay. Then partners have decided not to show revised value in the balance sheet and to pass an adjusting entry for it. So they are not interested to show this and all in revised balance sheet. Which of the following is correct treatment of the above? So they are asking correct treatment. So treatment lessons you will know. Treatment of goodwill we studied. So as per that format, we will go ahead. Treatment of goodwill, can you remember that? That sacrificing partner will be compensated in terms of goodwill, right? So here the existing profit and loss sharing ratio is 5/10, 3/10, 2/10. New profit and loss sharing ratio is 2/10, 5/10, 3/10. Okay. Now you implement old minus new. When old ratio is better to compare with the new ratio, what it is? Gaining ratio or sacrificing ratio? Sacrificing ratio. So we are doing that sacrificing ratio. 5 minus 2 divided by 10 will be 3/10. 3/10 is the sacrificing ratio for partner, yes. And 3 minus 5 minus 2 divided by 10. It is the gaining ratio. Who? Partner Arshaya gained, gaining partner Arshaya. Then Divya 2 minus 3 divided by 10, it will be around 1 minus 1 divided by 10. So C also gained. Who? Divya also gained. So 2 partner is gaining, 1 partner is sacrificed. Sacrificing partner's name is Samiksha. So as per the treatment of goodwill, sacrificing partner should be compensated in terms of goodwill by gaining partner. Generally, sacrificing partners capital account should be credited. So let's discuss here what is happening. Actually, negative figure, net loss is 50,000. Net loss is 50,000 has been provided in our books of accounts previous year. So 50,000 negative figure. It is debit amount, debit balance. Then after metodic claim means here market value is 30,000 investment wise, book value is 50,000. So 20,000 it is reduced. For that we have fund value, investment fluctuation fund 40,000. 40 minus 20 is equal to 20,000 plus figure. So 20,000 available amount we have. So negative is greater here. If positive is greater, Partners can be given, which is sacrificed partner can be credited. What's the sacrificed? 3 by 10, right? 3 by 10. So 3 by 10 of 30,000. 3 by 10 of 30,000 will be around how much? 3 into 3s are 9,000 rupees. But it is negative figure. If it is positive figure can be credited, means negative figure will be debited, right? So negative figure has been debited for partner Shamshiksha. 9,000 rupees debited, and as per their gaining ratio 2:1, right? 2 by 3 of 9,000 into 2 by 3 by Arshia, and 1 by 3 by Divya. So 2 by 3 will be around 6,000, 1 by 3 will be around 3,000. Going to be credited because it is negative figure. So this is the necessary adjusting journal entry. It is the R question. Sohan and Mohan are partners sharing profit and losses in the ratio of 2:3. It is their existing profit and loss sharing ratio with their capitals of 5 lakh and 6 lakh respectively. So it is their capital amount. On 1st January 2022, Sohan and Mohan granted loans of rupees 20,000 and 10,000 respectively to the firm. So it is the loan amount which was granted by both the partners. Sohan is giving 20,000 to the firm and Rohan by 10,000 as loan to the firm. Determine the amount of loss to be borne by each partners. So both the partners going to bear the loss. For the year ended 31st March 2022, if the loss before interest, mind it, loss before interest, keep in your mind, for the year amounted 2,500. So firm's loss is 2,500 rupees. 2,500 rupees. Now we should calculate when they are bringing their loan amount into the business, 1st January. That to how much? 20,000 and 10,000 respectively. Sohan and Mohan both are partners. Their existing profit and loss sharing ratio 2 by 5, 3 by 5. You well know it is their profit and loss sharing ratio. And their capitals were 5 lakh and 6 lakh respectively. It is their capital money. So first of all you should write like this for avoiding confusions. And they grant loan. When they are granting loan 1st January, that to 20,000 rupees by Sohan. So I am denoting here K means 1,000. Okay, 10,000 rupees. This is their loan amount. This loan they brought 1st January 2022. Date is most important. You well known about the partnership deed. Even the deed is silent. 6% will be given as interest on partner's loan. Now, firm's loss of the firm is 2,500 as per 31st March. So they are following the financial year 1st April to 31st March. Okay, already firm's loss is 2,500. So in the profit and loss account, you well known about the net loss. Net loss will be placed in the credit side, which is debit balance will be in credit side. Net loss, how much? 2,500 rupees. Now the firm is responsible to give interest on partner's loan. It is charge against profit. Charge against profit. How much we are going to calculate in detail. First ever, 20,000 has been given by Sohan. 6 by 100 into how many months? From 1st January to 31st March, nearly 3 months. So 3 by 12. 3 by 12. So now you strike it out. 00, multiplied by 6. So 6 into 2 are 12. 12 is 00 into 3 by 12. 100 into 3 is equal to 300 rupees. So 300 rupees should be given to partner Sohan as interest on loan. And for partner Mohan granted loan amount 10,000 rupees. 10,000 into 6 by 100. So it is the fixed percentage. Even deed is silent. 6% should be given. You well known about it provisions wise. 1932 Act says very clearly. And that too 3 by 12. It is the month from January to 31st March. 00 goes out. 600 into 3 by 12. 1 12s are 12, 5 12s are 60, 50 into 3, 150 rupees. So 150 here 300. For partner Sohan 300 and for partner Mohan 150. So together how much it should be given? 450 rupees should be given extra. Here nothing means definitely 450 rupees should be raised. 450. So firm is responsible to give this money to the partner. So loss is boosted up from 2500 to 2950 rupees. 2950 rupees. Okay, why I am writing in the debit side? It is charge against profit. That is why interest on partner's loan will be debited, which is boosted up already. Debit balance, debit side excess to compare with the credit side. Net loss will be taken place in the credit side of profit and loss account. Profit and loss account credit side. If it is debit side means net profit would be, so net loss is this much. So now loss is increased 450 rupees. So totally 2950 rupees firm's liability, firm's loss it is, firm's loss. Now these loss going to be appropriated as per their profit and loss sharing ratio. Come, let's appropriate. Not 2500, instead it is raised to how much? 2950 rupees. 2950 rupees into their existing profit and loss sharing ratio 2 by 5 into 3 by 5, right? So 2 by 5 of 2950. 1 5s are 5, 5 say 5 5s are 25, 4 45, 45, 9 5s are 45. Okay, so around 1180 rupees for partner Sohan, and for partner Mohan. Mohan is same amount going to be appropriated by this ratio 3 by 5. So 5 5s are 25, 4 9, 9 5s are okay fine 0. Now into 3 0, 3 9s are 27 7 மிச்சம் 2 மூவஞ்சா 15 2 17 1770 ரூபாய் வருது. Then for him 1180 rupees. So where it is, just to check it out, option D, share of loss to Sohan 1180 and for next partner Mohan 1770 rupees. Question number 5. Vihan and Mon are partners sharing profits and losses in the ratio of 3:2. So their profit and loss sharing ratio is 3:2. The firm maintains fluctuating capital accounts. Only one single account has been prepared by the partnership business. Fluctuating capital accounts as per this context. And the balance of the same as on 31st March 2022 is 4 lakh and 4 lakh and 65,000 for Vihan and Mon respectively. So as per the fluctuating capital account, their balance is 4 lakh 65,000. Drawings during the year were 65,000 each. Both the partners, they withdrawn 65,000 business money for their personal purpose. Okay, so that is considered as drawings. Both are taking 65 each. As per the partnership deed, interest on capital 10% per annum on opening capital has been allowed to them. So here the check is on what capital? On the opening capital, most important, but it is closing capital as per 31st March 2022. What has been provided in the fluctuating capital account? 4 lakh and 4 lakh 65,000 considered as the closing capital money. But this interest on capital 10% provided on their opening capital. Calculate the opening capital of Vihan, given that the divisible profit during the year is 2022-22, 21-22 is 2,25,000. So divisible profit is 2,25,000. But they are asking us to calculate what the opening capital of Vihan. What is the opening capital of Vihan? Have ever you learned it? Yes, you have learned in grade 11 itself in single entry system last chapter. What that is? Accounting for incomplete records. Can you remember those? How to calculate the opening capital? Statement method. and even formula based method also you have learned a lot. So now I am going to write here who are partners. Vihan and another one is Mon. Both are partners. Their profit and loss sharing ratio is 3:2. 3:2. It is their profit and loss sharing ratio. And their capitals were how much? 4 lakh and 4,65,000 rupees. 4,65,000 rupees as per 31st March 2022 wise. And the drawings, they did it drawings. So in case if we withdraw for getting the previous capital, what we should do? Drawings already withdrawn from the business, that should be added. Then only we can get the previous capital. Okay, that is considered as opening capital. Going to add the drawings. So drawings for their personal purpose, they withdrawn 65,000 each as per the problem. 65,000. Sir, why sir you are doing for both the partners? Here has been asked only one partner Vihan's opening capital. For your better understanding only I am doing this. Okay, 4,65,000 totally. 4,65,000 rupees. And for him around 5,30,000 rupees. So it is their adjusted capital. And before that, profit should be appropriate, right? That too, interest on capital has been provided on their opening capital. That opening capital we should find it out, but it is the adjusted capital method. Adjusted capital only found out. Adjusted capital it is. But profit, what is their profit is 2,25,000. So this is also appropriated. As per 31st March 2022, 4,65,000. It is their capital money after given that profit to the partners. So profit is boosting up their capital, right? So now that profit we are going to appropriate. It was appropriated already, but now we are going to appropriate and we are going to deduct. How we added the drawings withdrawn, that was depromoted their capital. Now it has been added to get the adjusted capital and even for the opening capital. Same like that, this profit already boosted their capital money. So now we are going to deduct the profit, right? So for that we need to know what is their exact profit has been distributed. It is divisible profit, so distributed how much? So their profit and loss sharing ratio you will note has been entered here 3:2. So 3/5, 2/5 on 2,25,000. For Vihan, 2,25,000 into 3/5. 1 5 are 5 for the 1,35,000 rupees. Okay, 1,35,000 rupees for a partner whom? For Vihan. And for another one partner is there. Who is that? Man partner. For man, how much it is? Same 2,25,000 into 2/5. So 5 same like that, 45,000 into 2 will be 90,000 rupees. Okay, but here they are asking us to prepare opening capital for whom? Only for Vihan. So for Vihan's case, if you check, 1,35,000 already was credited, which was boosted up to get this profit, get this capital money. So now we are going to deduct or subtract how much? Profit amount, which was already credited, 1,35,000 for Vihan. So now you less it, subtract it. It will be around 3,30,000 rupees. 3,30,000 rupees. Okay, and for Man, for your better understanding, for Man also I am doing here 90,000. If you did, okay, it will be around 4,40,000 rupees. Okay, next one. Now we are getting what kind of capital it is. It is the opening capital. Opening capital. On this opening capital 10%. That too, this opening capital after given what? Interest on capital they enjoyed. With the interest on capital only 3,30,000 for Vihan. Okay, so okay, this 3,30,000 is the opening capital. Opening capital. That too, this opening capital along with interest on capital money. So now that interest on capital we are going to calculate exactly, because as per the problem 10% interest on capital can be provided on their opening capital. This opening capital with interest on capital. This opening capital is available. So interest on capital also included in it. So we are going to calculate 3,30,000 into 10 percentage, right? 10 by 110 because it is with interest on capital. That is why we are doing this formula 0, 0, 1 ones are. So 3 ones are 1, 2, 3, 4. 1, 2, 3, 4. So nearly 30,000 rupees consider as interest on capital what Vihan has enjoyed. Vihan enjoyed 30,000 as interest on capital. Now his opening capital will be 3 lakh rupees, especially for Vihan. So this is the answer, option D. Option D is 3 lakh. But for Man is another partner, right? So Man's interest on capital also I am doing here 4,40,000 on this 4,40,000 into 10 by 110. 0, 0, 11. So 4, 1, 2, 3, 4, 1, 2, 3, 4. 40,000 rupees. 40,000 rupees is the interest on capital for another partner, Man. So his opening capital might be 4 lakh rupees. After deducted, what we are getting, that is this opening capital. Okay. I hope you enjoyed and you are learning a lot. So this is the method for finding out interest on capital, especially this opening capital. Here the opening capital is 3 lakh rupees. Are you clear? Come, teacher.